Hi there, welcome to Kneppy Invest, and welcome to 3 stocks or companies on the ASX that released interesting or intriguing Appendix 4Cs for the June quarter 2025. I am recording this video on the 1st of August, intending to release it sometime in September. And in fact, this is my 6th video in this series, and it looks like I'm going to be recording another 20. So I intend to release all of those videos before mid-October. And the reason I intend to release those videos by mid-October is because we'll start to see a lot of these companies releasing their September quarter results. And I think these videos might be a good lead-in to see how some of these companies' momentum has continued, if it's continued, into the September quarter. Okay, so in this particular video, I'll be focusing or featuring a company called Unith. Unith. I thought this company was called Unity. And so based off the very fact that I completely did not know the name of this company, it's understandable that this is the first time I've looked at Unith. So Unith will be the first company we look at. Then we'll focus on Fineos. I've definitely looked at this company before. Fairly big company, by the way. And then we'll look at DXN, another company I've looked at in the past. And I do find this company intriguing as well. So they had an interesting Appendix 4C, and I find the company itself quite intriguing. Okay, so let's start off. And by the way, what I'm going to do in these videos, or this video, is I'll just go through what these companies do fairly quickly, and then we'll have a look at the Appendix 4C for the company. Then we'll go through the cash receipts history, and then the chart. Okay, now the first thing about Unith, ticker code UNT, a fairly small company. And when I say small, I'm talking about a market cap of about $8 million, $8.87 million, has $1.5 billion of shares. And you can see the share price is at 0.6 cents. So immediately, this company is a bit of a turn-off for me just because where the share price is. I'm not a fan of companies whose share price are below 1 cent. Now, this is the first time I've looked at this company. And I had a look at their About section in one of their announcements. And I sort of had an idea what this company does. And this is their web page. And you can sort of see what they're leaning into. So easily create, deploy, and scale AI-powered digital humans. Yeah, so this is something, I wouldn't say this is something I'm getting into, but this is definitely potential growth area. Now, just what they're doing remains to be seen because I haven't gone that far into this company. They do have a product section. In fact, they asked me if they could use my microphone. I said no. So this is some of their products. Create digital humans in minutes. I would say there's a lot of competition. There we go. Wants me to use it's my microphone, my Yeti, and I'm going to say not now. Sorry. So create digital humans in minutes. There would be a lot of competition out there because I have looked at doing this sort of thing, and I do find it interesting. So this is one of those companies that seems like in this space. Okay, so that's a brief look at what they do. They also have use cases here. I find use cases really interesting just to see how companies are using this company's services, how their customers are using this company's services. And learning and development, customer support, sales and marketing, hospitality, mass awareness, and human resource. This is definitely a growth sector, growth area. But just because it's growth area doesn't mean this company is going to succeed because there will be a lot of companies, as I mentioned, there'll be a lot of companies, a lot of competition, and not all of those companies are going to succeed. And if you want to have a closer look at this company, you could have a look at their company values and some photos as well. And I would have a guess that most of the people working for this company are quite young. Yes, have a look at their team. They do look quite young. Okay, now onto this company's Appendix 4C. Why I have included it in this particular series. Okay, so again, share price, 0.6 cents. That is, again, a bit of a turn-off for me. But just because it's a turn-off doesn't mean I can't have a closer look at this company, particularly if the share price starts rising and the market becomes a little bit more interested in this company. And with a market cap of $8 million, yeah. Okay, so if they do become operating cash flow positive and profitable on an ongoing basis, and the share price gets above 1 cent, I'd be quite interested in this company. Now, there are some ifs there, big ifs. Okay, so let's have a look at their Appendix 4C. And Of course, the first thing I always do when I look at these reports is I go straight to the numbers. Go straight to the numbers. And the first thing I want to see is whether a company is operating cash flow positive or not. But Unity or Unith was not. They were operating cash flow negative by 138,000. Now, that does not necessarily mean I lose interest in a company and I don't want to do more research. And the reason behind that is if you have a look at the year to date, they were operating cash flow negative by 2.2 million. So if they either have increased their receipts without increasing their costs to get to the point where they're not burning through a lot of cash, or they haven't really increased their receipts and they've just cut their costs. I prefer the first sort of scenario where they're increasing their receipts at a greater rate than they're spending. That would show that the company might have a bit of operating leverage and scale. And if they keep on increasing their receipts without increasing their costs, then the company could be close to that inflection point. So I'm always looking for these sort of companies that might be close to the inflection point. Now, they do spend a little bit of money on intellectual property. I would say that's capitalized research and development. It's an ongoing cost. So they spend sort of the same amount every single quarter. So I do take that into account. So that means the company is about free cash flow negative $500,000. So they're still a little bit away from being cash flow positive. What about debt? I would be surprised if this company had debt. No debt. And I don't think they have to answer question 8. No, they have 3.3 quarters of funding based off the cash burn in this quarter. Now, if you have a look at the commentary, which I do sometimes have a look at, typically I just focus on the highlights. So for instance, they have a financial highlight, an operational highlight, and in their financial highlight, they just mentioned that cash receipts, 1.6 million, up 19% on the prior quarter level. And they also go through cash receipts at a quarterly high over the 3-year period since the digital human technology has been deployed. So this technology has been deployed for about 3 years. And they also talk about some strategic collaborations in their operational highlights section. Key adoption metrics, 240 new organizations are boarded to the platform, 2,100 digital humans created and deployed for conversational use cases. Okay, and an estimated 120,000 end user sessions. There you go. Okay, so now on to the cash receipts history. So I want to see cash receipts growing through time. And I suppose for Unith, they are growing through time, albeit fairly slowly. So we have about 2.5 years of history here. And they are growing. And this was a record quarter. So, I mean, I probably would like to see the receipts growing at a greater rate than this, but they're growing. Now, they're not growing every single quarter, but we continually see new record quarters, albeit this was a record quarter that beat the last record quarter over a year ago. Anyway, so there is a trend of receipts increasing for Unith. So at least that's a nice thing. And if they can become operating cash flow and free cash flow positive, that means they can grow organically. They don't have to go back to the market for new capital. And we don't want to see the shares on issue increasing anymore, although they could do share consolidation. Okay, now onto the chart. And I would assume that with the share price at 0.6 cents, the chart is not going to look good. In fact, I haven't looked at this chart maybe ever. I don't remember looking at this chart. And yeah, the chart is not going to look good. In fact, the share price fell to 0.5 cents recently and just keeps on falling. Now, I don't know when this company listed. Oh, looks like it's been around for a while. It might have changed its name or something like that. In fact, if you're ever interested in the history of a company, you could just have a look at Market Index, go through the announcements. And what I sometimes do is hit the double back button to go all the way to the start. So this company listed in its original form in 2006. I doubt it was called Unith at this point. It was probably called another company. I wouldn't be surprised if it was a mining company and then like 2017, they backdoored into something else. In fact, this company was called Q Limited. And I wonder if they were fans of Star Trek. But what I like to do is just to know when the company did change its name to Unith. And then I'll just go through, what I usually do is just put price sensitive only, and then just go back through time. And looks like this company, Crowd Media, was called Crowd Media maybe. Yep, Crowd Media. I can't remember this company at all. And then they changed the name to Unith, but nothing's in my head right. Nothing's in my brain about Crowd Media. No, nothing at all. Anyway, so this is really the first time I've looked at Unith, and apart from the share price and the very fact the company is not yet profitable or cash flow positive, apart from those little things, there are a few things to like about this company. But for me, this is just wait and see. Just be patient, wait and see, just see how the company performs over the next few quarters. Okay, so that's Unith. Next, we have Fineos. This is a much bigger company than Unith. In fact, I do know what this company does. Based out of Dublin, and they provide software for insurance companies. Probably the best way to say what they do. In fact, I'm pretty sure they are based out of Dublin. Definitely Ireland. Definitely Ireland. Hey, I'm going to say Dublin. That's where the headquarters are. Anyway, so Fineos platforms. So we have admin suite, Fineos absence, billing, claims, payments, policy, provider, rate, underwrite. So a lot of things to do with insurance. And that's probably all you have to know about this company. They provide software for insurance companies, superior insurance technology. There you go. Anyway, so this company is much bigger. In fact, Fineos has a markup, $800 million. $897 million, ordinary shares on issue 338.5. So this is a much bigger company, one of the biggest companies on the ASX that do issue Appendix 4Cs. Maybe not 5Bs. There are a few big mining companies that still issue 5Bs. Anyway, so let's have a look at Fineos' recent quarter. Now, this company really popped up on my radar a few years ago when they had a really good quarter, but you'll see when we have a look at the cash receipts history that it can be quite lumpy. And then last quarter, the April quarter or March quarter, I wouldn't say it blew me out of the water, but I did appreciate it. And I'll just show you in a second why I appreciated this particular quarter. The March quarter 2025, if you have a look at the pennies 4C, they were operating cash flow positive by $24 million. Now, they do spend a fair bit of money on intellectual property, 7.2 million. So that means they were free cash flow positive by $17 million in one quarter. So I was like, ooh. But again, this company is quite, I wouldn't say expensive, but it's not cheap. Well, I wouldn't say it's cheap, but it's all relative. But it's not at a valuation that I'd go, wow, I have to buy some shares. Put it that way. So if you use a margin of safety, you probably wouldn't be in this right now because there's still a lot of uncertainty when it comes to this company in terms of valuation, and there's no uncertainty when it comes to growth, but still just a bit of uncertainty when it comes to valuation. And on occasion, they do release a quarter that is a little bit more underwhelming than what we saw in the March quarter. This was not, well, I suppose you could say this was one of those quarters because receipts were well down, 35.1 million euros. So they do report in euros, because they are out of Dublin. Not sure why this came to list on the ASX instead of elsewhere on the Irish exchange, but here we are. They were operating cash flow positive this particular quarter by 8.3 million. But again, have a look at intellectual property, $7.2 million in the quarter. So they spent a lot of money on research and development, so capitalized research and development. So they were free cash flow positive by about $1 million in a quarter. So even though the operations look good, I do like to include that intellectual property. Now, another thing I just mentioned is if you have a look at debt, they don't have any debt. A little bit of financing facilities, but do they really need that? Do they really need it? Unless they want to do an acquisition or anything like that. Okay, so let's have a look at the company's cash receipts history. Okay, so there's a chance that this company won't be releasing Appendix 4Cs for much longer because they have been operating cash flow positive for a while, and eventually they will be told by the ASX. I'm not sure if they have to ask or if the ASX tells them that they don't have to release Appendix 4Cs anymore. Anyway, so cash receipts over time, since they listed on the ASX back in late 2019, cash receipts have been climbing. But you can definitely see a bit of lumpiness here. And it seems like April quarter can be the best quarter. We've seen that 2 out of the last 3 years before receipts pull back a little bit. But definitely receipts are on the increase. But just a little bit of lumpiness here. So on occasion, you will see about a quarter. And in fact, we saw that in the December quarter last year, $24.5 million of receipts. Anyway, so that's the receipts history for Fineos, and nothing to absolutely dislike about receipts history. Receipts are going up through time. Albeit they're a little bit lumpy. Okay, now onto the chart, and no issues with this chart. In fact, I have traded this in the past, and there was Fineos share price was in a downtrend during the last bit of 2023 into most of 2024. And then all of a sudden, on one day, the 13th of November 2024, share price of Fineos jumped 28.3% on the day and broke out of the downtrend, and that was a time to buy. I actually remember that day and thinking, oh, should I buy and trade Fineos because it was broken out? And then I thought I'll just wait to see if it tests the downtrend line, but it didn't. It just kept on going up. It sort of did pull back in February and then took off again. So I wish I was sort of paying a little bit more attention. But the chart is looking good. Share price in a nice little uptrend, and nothing wrong with this chart at all. I like it. Probably the only thing I'd say negative about Fineos is maybe just the valuation. Maybe just the valuation. Okay, next company I'm going to be talking about is DXN Infrastructure at the Edge. The way I think of this company is modular data centers, but I'm being a little bit unfair because they also do own a few data centers. I'm pretty sure in Darwin and maybe Hobart, but I just think of this company as modular data centers. So DXN modules built to order. They talk about Darwin here. Oh, I think, yeah, DXN TAS and SDC Darwin. Also a few other services as well. So definitely in the right space. And we have seen the market interested in this company in the past. But remember, there was a period of time, I think it was maybe 6 months ago, there was a little bit of the hype came out of data centers, and we saw a lot of data center type companies share price pull back significantly. I'm not sure what that was, why that happened, but we're starting to see a little bit more interest come into data centers or data center companies recently. Okay, so let's have a look at this company. Oh, by the way, DXN is a fairly small company. Market cap, was it 20 million or something like that? 18.52 million shares on issue, only 300 million, so not bad at all. So let's have a look at DXN's Appendix 4C and why it's popped up in this particular video. There was a comment from one of you who asked me about DXN. Maybe it was Stu Percy, could be wrong. Did say this was an interesting Appendix 4C. They did release a presentation alongside the Appendix 4C, which I do like. I love when companies, especially small companies, release presentations because I wouldn't say lazy, but I just like nice presentations. I just wish Americans would do it more. American companies don't like presentations, it seems like. When they release results, it's just boring. It's just like financial results, and that's it. Anyway, so DXN's receipts to customers $3.618 billion, and the company operating cash flow positive $56,000. Another thing about DXN is they have been announcing a few contract wins and that sort of thing recently. Well, over the last 3 months or so. So, for instance, a $1.6 million indoor modular contract, $4.6 million modular data center deployment, $2 million modular data center contract with DP World Australia. So that's within the last 3 months. So they are winning contracts, and that's exactly what I like to see. They also executed its first data center as a service contract. That's right. They have data center as a service thing going on. Okay, so let's have a look at these companies. Or go back to this company's Appendix 4C. So operating cash flow positive, $56,000 in this quarter. So they're positive, operating cash flow positive. But for the year to date, operating cash flow negative by $4.5 million. Now, if you have a look at product manufacturing operating costs, $1.7 million in this quarter, but $9.4 million for the year. So they have sort of pared back on that product manufacturing operating costs. I wonder if they have a little bit of inventory. I don't know. But that's one of the reasons why they were operating cash flow positive in this quarter. $2.3 million in capital expenditure, so not free cash flow positive. Although in saying that, it looks like they did all the capital expenditure in this particular quarter because the rest of the year they only spent, what was that, $57,000. So maybe they do all the capital expenditure in the one quarter. And any debt? I don't know. Let's have a look. $5 million of debt And I do like to have a look at section 7.6, which goes into particulars of the debt. For instance, the $5 million secured facility has been arranged with iPartners to refinance the existing pure loan, settle the Darwin vendor warrants, and fund the acquisition of the data center property. The facility carries interest rate of 9.95% per annum and matures in November 2026. Okay, so this company does have a little bit of debt. Okay, now onto the cash receipts history. Let's have a look. I am assuming this is going to be quite lumpy as well. Probably even more lumpy than Fineos. So let's see if I'm right. Ooh, I'm going to make one slight change. I don't know if I can change. See if I can change it. This is going to be interesting. See if I can change it and see if it transfers. I'm going to change it on the other computer. I'm just going to decrease the gap width. Does it change? Oh, it changes. Look at that. I can actually change. Oh, no, that's too much. And the other thing I'm going to do is increase the font. Well, I suppose I don't have to. It's actually pretty big. Okay, so the first thing, there is lumpiness here, but definitely we have seen a significant increase in receipts over the last few years. If we go back to 2018, so this company was around then. I can't remember looking at this company at all back then, but I was following their Appendix 4Cs, and receipts weren't doing nothing back then. And then we started to see receipts, or this company saw their receipts increase after COVID-19, reached a peak of 6.2 million in the December quarter 2021, and has been quite lumpy since then. And we do on occasion see receipts be quite low, comparatively speaking, around about $2 million. That might be a flaw. I think they might have some annual recurring revenue. And let's just confirm that. We'll go to in fact, we might go to the presentation. Here we go. Here's what they do. Modular division, data center operations, Darwin, Hobart, and data center as a service. So there you go. Do they have annual recurring revenue? Revenue by quarters. They don't mention annual recurring revenue or anything like that. I haven't seen it. They signed the first data center as a service contract valued at $3.6 million. There you go. Strong pipeline. They do talk about was it $12 million or something like that in the pipeline? And yeah, but nothing in regards to annual recurring revenue. I was thinking maybe annual recurring revenue was about $2 million. So that could be a flaw on their receipts and revenue per quarter. And that does give I do know quite a few investors like that sort of thing because it does put a flaw on the revenue and receipts. Because another company that's just relying on contract wins, and then those contracts, if they're only over like a 2 or 3 year period, they go away, and then if they don't win more contracts, then you can see a pretty big decrease in revenue or receipts if they don't have these recurring revenues. So I do know quite a few investors love recurring revenues, but for those companies that do have recurring revenues, I do think there is a bit of a premium. So I was just wondering if DXN had any of those, but I didn't see anything. Okay, oh, my pizza is ready. I'm doing the pizza base right now, and I can just see the bread maker saying it's ready. Okay, now onto the chart. Time this to perfection almost. Now to the chart for DXN. Okay. So we definitely have seen, they must have done share consolidation back in 2024, early 2024, just based off the chart. A lot of interest in this company in the middle of 2024. Share price ran up a fair bit, went from 2.5 cents to over 10 cents. Did not know that. There you go. And then it pulled back. So again, a little bit of a deflation in the data center bubble, if you can call it that. I'm not sure if there was a real bubble. Share price of DXN pulled all the way back to around about 2.5 to 3 cents. But then the share price looks like it broke out on the 2nd of June. And the share price and the chart looking pretty nice right now. So no problem with this chart at all. Yeah, but I'd like to see a little bit more over the next few quarters from DXN. But it's not that expensive either, with a markup of below $20 million. Okay, that's all I have for this particular look at 3 companies that released interesting or intriguing Appendix 4C. First time I've looked at Unith, Fineos, and DXN. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.